Hello everyone, this is your host Vaibhav. I welcome all of you to today's session of Daily Stock, in which we are going to take a look on the quarterly report of Honeywell, which is a leading company in the segment which are innovative to say the least, because this is one of a kind company. There are not many competitors for it, which are helping other big industrial players to achieve sustainable ways to carry on their operations and secure their current workings as well as the future. It operates in segments such as industrial solutions, the building, aerospace, and also there is one more segment which I am not remembering that well. So we will see its recently released earnings report to see how things are shaping up on different fronts for the company and how things are likely to pan out in the short term to the very long term. The sales were up for the company. The reported and organic sales went up by 3 percentage point to the US dollar 9.1 billion. It has also achieved better operating margins this time around, with this 130 basis point increase to now operating margin standing at 20.4%. The segment margin is up variably to 22.2%. The EPS is slightly higher. It has been able to achieve its consensus estimates for the first quarter of 2024, and at the same time it has also provided a rosy guidance for the second quarter. So in this backdrop, the investors have been quite happy with this performance, and that has also started to reflect in its valuations in the market. It has been having a bull run in the long term, while it has been consolidating with upward bias in the short term. I feel there is a strong belief in most of the shareholders, in most of the investors in the marketplace, that Honeywell is quite secured about its potential to continue its bull run, and this company, which secures the operations of others, is also likely to secure its own bull run given the fact that its earnings have been robust and it is doing quite well in most of the parameters. Let us now go to its consolidated statement of income. This is a summary of segment-wise financial results. These are the key segments in which it operates: the energy and sustainability solutions. One example of its operations in the energy and sustainability solutions is its innovative ways to blend in the waste, like organic waste like vegetables and food leftovers, to try and convert it into aviation fuel, sustainable aviation fuel. So these are innovative ways in which it is trying to secure the present as well as the future. It is also there in the segments such as industrial automation and the building automation. It tries to provide solutions to the clients to automate most of the processes which take humongous effort and energy, and automate those processes so as to achieve better results in terms of the higher production in a energy efficient manner. Its growth in the aerospace segment has been quite impressive, where its revenues have gone up in higher double digits, with this growth of 18 percentage point growth in the sales, all of it coming as organic growth. This is nothing less than impressive, to say the least. The segment profit is at 25% and the margin is up by 150 basis point. So this is one of the best segment-wise result for the company in all the four segments it operates in. I feel that this is one of the factors which is likely to help company moving forward with its product sales and services sales growing steadily with net sales standing at $9.1 billion. We can be fairly confident of its ability to sustain the momentum. And even if we don't really see any single standout quarter, I feel with this approach of slow and steady, the company is likely to keep growing for the foreseeable future. The income before taxes stood at $1.87 billion, which is around 4 to 5 percentage point higher in comparison to the income for the quarter ended March 31st, 2023, where it was earning $1.78 billion. Coming to the EPS, the EPS is higher from $2.09 to $2.24. Now let us look at its cash flows to understand how it is managing its cash liquidity. This is the balance sheet. Now we turn our gaze to the cash flows. From the operations, it generated $448 million, which is a turnaround of salt because last time around there was an outflow of $784 and a big contribution in these last times outflow was this narco buyout payment, which resulted in the $1.325 payout, and that had turned its operating cash flow negative. But now, with that item out of the statement, we have this cash inflow from the operations. Coming to the investment activity, the company has decided to increase its investment by $238 millions. It has also incurred capital expenditures of 233 million, and taken together these outflows have resulted in the net investment outflow of $273 million. From the financing activity, though, it has been able to raise quite a lot of cash from the proceeds with the issuance of long-term debt. From it, it garnered $5.7 billion, and that has helped it shore up its finances with its cash pile now piling up to more than $11.7 billion. There was no new issuance of debt last year, but now there is this fresh issuance. It has also paid up some commercial paper and short-term borrowings of $2.47 billion. And if we consider the payment for the long-term debt, the repurchase of the common stock, and cash dividends, taken together, these have cumulatively taken out somewhere close to $2 billion of cash from the kitty of the annual. And with the help of new fundraising from the market by the issuance of the long-term debt, the company has been able to grow its cash and cash equivalents at hand. With the beginning, it had $7.92 billion. Now it is up to $11.75 billion with this larger contribution coming in from the financing activity. But at the same time, if we simply consider the net flow from investment and the operational activity, there is net inflow of somewhere close to $150 to 160 million. So it is positive in an operational sense as well. And at the same time, to expand its operations and reach, it has raised fresh capital from the market as well. Now we turn our gaze to the technical side of the story with its charting available to us on the JForex 4 platform provided to us by Dukascopy Bank SA. This is the chart where each candle period is defined as hourly. We are simply looking at its short-term charting. If you consider the price moves over last 2 3 weeks, it has rallied quite well from around 200 to now standing at this new peak of 212. It has been moving with bullish bias for last couple of months. It had made this peak at around $246. From there on, it went on to correct around 10 percentage point. Not I think 10 percentage point. If we count from top to the bottom, it was around 7 to 8 percentage point, and from that level, it started to recover, and in no time, it is back to the swing high achieved in March, and at the current juncture, it looks well poised for further growth in the coming sessions. So if your outlook is off next few days only, purely short term, then I think the momentum is favorable for the buy on dips approach, as I expect this immediate bullish momentum to be prevailing over next few sessions, if not more. Our outlook is simply for next few sessions, the better part of this week, and in it you can adopt the approaches like buy on dips as long as it is holding close to or above 200 price mark. I feel we can be fairly confident in its ability to continue to rise with this formation being of high highs and higher lows. So in that context, if you are looking to trade and invest for this week for the next few trading sessions, then clearly the case is made out for adopting the buy on dips approach. Now expanding our time horizon to medium term, I have changed this candlestick period to day from hourly earlier. In it also, the price formation is looking more favorable for the bullish traders and investors. It went considerable amount of time hovering close to 200 mark, where sometime it was up slightly up towards 205 210 mark, and then sometimes it was down closer to 190 mark, but it wasn't really going anywhere for long period of time. Last couple of months it remained range bound, and now it finally seems to be in a hurry to break past this immediate swing high. So I feel now at the current juncture we are a bit late to the party. If you had invested from the medium term perspective maybe a couple of weeks back, that would have been a better deal. At the current juncture, it is going to be quite difficult to say that we can invest and expect decent risk reward ratio. Even at the current juncture, the momentum is favorable for the bullish trade, but then we also have to think about the possibility of we getting it wrong. And in that scenario, the risk reward ratio needs to be favorable, because we don't really want to lose too much money in the eventuality of our assessment going wrong. So As a cautious investors, I would say that we'll have to wait for a better opportunity somewhere down the line from the medium term perspective. The boat has sailed, and even if it continues to rise, it is not a good trade purely from the risk reward perspective. Otherwise, there is nothing wrong about its bullish expectations. From the long term, the momentum is also in the favor for bulls here. It has been able to clearly cross and hold above immediate swing highs. So it is able to achieve this new peak with this stability and long extended consolidation closer to the 200 price zone. I feel we are likely to see it continuing this bullish momentum, and the best way to do this Honeywell's bullish momentum in our favor to take advantage of it is going to adopt a buy and dips approach here from the long term as well. I said the same thing for the short term. The only time horizon where we needed to step back was medium term, where the opportunity clearly seemed like out of our reach now, as there has been rally already. But if you are looking from the long-term perspective, I feel here some opportunities might come your way if there is a correction from the current levels anywhere close to prior swing low, closer to 190, about that price range, and if it holds closer to this 190 price range, from it had bounced back twice, and I feel that gives us reasons to believe in strong support closer to these price areas. So I am going to expect it to do the same whenever next time there is a further correction and consolidation closer to that price zone. But if there is a correction and consolidation closer to the 190 over next few sessions, then we will be able to take advantage of the situation and invest in it from the long term scenario, from the long term view. So that's it from my side for today's session, where we considered the outlook for the Honeywell from the long term to the short term and medium term included. We have seen its quarterly report, which is promising. It is showing sustained growth. It is a company which is growing slowly and steadily. It is garnering market share in different verticals, and it has been able to expand its operating margin, post better operating margin this time around in comparison to the same quarter a year back. So that points to the increased efficiency in the operations for the company, and with its ability to raise revenues and net income, I think it is well poised for further growth in the coming days, coming weeks, coming months. Now it's time for me to sign off for the day. If you have found the session informative and useful for your trading and investment purpose, do write to me the feedback. You can like and subscribe to the channel, and you can also post your views in the comment section so that I can respond accordingly. Thank you all for joining in. Have a fabulous time ahead. See you next time around. Till then.